All right. Welcome, everybody, to our weekly Probate Mastery Group coaching call and the Estate Professionals Mastermind podcast. I do want to mention one thing, though. We have, as you guys know, I introduced you to McKenna a couple of weeks ago, our new integrator, and a big part of her role is transitioning us to a more effective tech stack and a set of tools. So this is that week we've all been dreading, but it's so far so good. We're actually transitioning the course off of its current LMS onto a Kajabi account, so we can expand our product offering this quarter and the rest of this year. But if you're already enrolled in the course, expect an email from us with your new login. And then over the coming weeks, we'll have some more good news for you guys. If you have trouble, just email support at Probate Mastery, and Tom or McKenna will jump right up to help you. And first up this week, we have Michael. How can we help you, Michael?
Hey, Chan. So recently, my shares in some syndications, the underlying investment was sold. And so for whatever reason, right now, a very large percentage of an uncomfortably large percentage of my net worth is invested in the amazing shrinking dollar. Normally, I would just set it out and invest it for a couple of years in some other passive investment. But what's different now is I'm preparing to be a licensed probate professional, which involves potentially partnering with the decedent's estate. It might be asset secured loans. There's reserves that I might need as I'm starting a new business. All these things that I'm learning about, trying to figure out how to put together. What are some questions that I should be asking myself, and maybe some resources I should be checking out when I try to decide how much liquidity I should be keeping? That makes sense?
Yes, very good question and very good timing on that. It's a good time to talk about it. I think I've shared with you guys, I'm pretty open about my own finances. For the first time in my life, I have gotten rid of all of my cash, but 3 months of living expense. And for me, I live pretty modestly. So I'm as low as $30,000 in my personal bank account. That's as low as I've been since I was in my 20s, like since I was waiting tables. The reason for that is if you go to shadowstats.com and you look at the 1980 measure of inflation before we manipulated the current CPI, you'll see, and that's not updated on the latest CPI, that's from last month. If you include food, housing, and energy, inflation is running north of 15%. Once that is updated, it's not updated, by the minute, but I expect the real number of inflation really after what happened in the last week and a half, we're probably north of 20%. The Fed's in a conundrum where if they decide to raise rates or taper asset purchasing, it could collapse equities prices. So I don't think they're in a position to do more than rattle the saber. It seems to me, and this is, again, I'm not a financial advisor, not your fiduciary. I'm just sharing with you how I assess my own risk. But for me, the most dangerous investment right now is sitting in cash. There will always be someone who will disagree with me. But for me, I invest in assets that have proven in the past to do well in a recessionary environment. From a macroeconomic status, we're actually in a deflationary period that will last the next few decades because the large percentage of the valuation in our equities is driven from what? Technology. And that technology by nature is deflationary when it comes to economic principles. It takes away jobs, it adds efficiency, and it lowers cost. So the Fed is fighting itself based on the economy we built. We emerged into an information economy, but we left our system set up for an industrial economy. And we're just not we're going to have to suffer the transition of that. So for me, as far back as 4 years ago, I started to move my assets accordingly. I like syndications and passive income, but oftentimes that comes with a real lack of liquidity. But for me, I have taken a chance. I spent off all of my liquidity. I had nearly $1 million in cash sitting, and I was always that. You got to hold on to strike money. But once the levers were pulled in early 2020 or early to mid 2020, I was no longer comfortable holding my own cash. So I started to move that off into different buckets. I like cryptocurrency from a long-term perspective. It's not something that I trade on like a lot of people do. I control mining and I control algorithmically managed crypto funds to benefit from that. I invest in real estate lending funds. I feel like real estate is a good asset class. I think that these current prices aren't realistic long term. I think a lot of them are driven by cheap debt that shouldn't have naturally been part of the system. So what goes up must come down unless we commit to an agenda like Japan has, and we just keep printing in perpetuity, and we can make that last as long as they have. Potentially, I'm wrong. But for me, like, I don't know. I don't have a crystal ball, and I'm not the smartest economist in the world. But when it comes to protecting my own assets, I don't want them in cash right now, but I won't tolerate less than an 18% annual yield, and I won't tolerate less than a liquidity in less than a year. So, for example, one of the funds that I've invested in recently, here's the deal. I want to give as much as I possibly can to you guys. This is being broadcast everywhere, and I don't want to get sponsors or friends or anyone with private registered funds in hot water. Let me check out the legality of suggesting and sharing with you guys exactly where I'm investing my money. It's a relationship business. I don't want any of this to be construed as broadcast marketing and me acting on their behalf, but I'm investing in mezzanine finance funds with zero default rates, liquidity within the day. So when a guy needs to do a commercial real estate deal, he goes to a private finance company. And just like what you guys would think of in residential real estate, they're most often called hard money guys. But in commercial, there are private lenders in the commercial space that scale bigger than banks, like bigger than FDIC institutions. So I'm invested in one of those. I'm invested in solar development to eliminate taxation. You can actually choose not to pay taxes by investing in opportunity zones, solar, gas, oil, things like that. I've focused on minimizing the taxation, but putting it in places where I can get at least a double-digit yield with liquidity within 12 months. Some of the investments that I invest in have liquidity within days, even though they are private offerings. It's because the fund managers, I have underwritten tens of thousands of different funds. I tend to look at the people first and then what those people are offering. I've gotten it down to about 10 that I trust and that I want to suggest right here, right now. I need to make sure that's okay with them and understand the legalities of it from an SEC standpoint. My concern is that someone points and says, well, Chad was a representative of you. He was saying you're the best thing ever. And that bleeds into their SEC registration. And I'm not willing to take that chance. But so sorry for the rambling. But what I would suggest is continue to look at syndications. They're a really great way to park capital where you're not having to be the operator. And it's not taking away from the dollar productive activity of what you're starting to build. Finding those funds with high yield, low risk, and liquidity is extremely difficult. I can point you right to them once I kind of talk to them and make sure that's okay to do. But that's what I'm doing. I completely abandoned my retirement plan. I've been using self-directed checkbook control IRAs since 2011. I saw the government threaten to move the goalposts in May. They thoroughly moved the goalpost by November, and I was out of the way of that. So I now use, and we'll have an episode publishing one of our Ask the Expert episodes. It's probably might be 2 weeks, but I got Damian Lupo, who is the founder of EQRP.com. And we took a deep dive on how you can protect yourself and be in charge of your own retirement. The way their accounts are structured, you have a traditional side and a Roth side. I actually chose to take 100% of my money, move it to Roth, incur the taxes, and then instead of paying the taxes, invest that additional capital into solar development. So I was able to restructure my retirement accounts and play by their new rules and avoid the tax penalties of that by reinvesting into opportunities that the IRS wants me to invest in. I'm very interested in moving this community toward a conversation like that. I just haven't. I need to be sure that because I don't have a securities license, I need to make sure certain things I say are okay. And it's new to me to talk about this at this level, this publicly. But my advice in short is get the hell out of cash, get into income producing assets. And the more liquidity you have in those income producing assets, the better off you will be. Because there will come a moment where this will turn, the piper will have to be paid, and there will be blood in the streets, and you want to have liquidity. The other thing that you might consider doing is self-banking. And there's different ways. I self-bank in at least 3 different ways. One is I buy real estate cheap because it's something I understand and I know how to do it. I can find those deals. So I'll get a piece of real estate anywhere from 10 to 50 cents on the dollar. I'll go in and do any capex that's needed. I'll get an appraisal, and then I go to I use First Citizens Bank. If you have over a 770 credit score, they'll do an 89.9 LTV HELOC or home equity line of credit. That's prime plus 1.25, and it can be closed within days. So I buy real estate and turn it into banks. So I have strike capital sitting, but I'm not paying interest and I'm not losing money to inflation, and I don't have to pay taxes to have access to the capital. That's one simple way. Another way is I fund to the maximum. I fund index universal life plans. That's something that, be careful. There are thousands to choose from and only a handful of that are worth it. But if you get the right index universal life plan, you can fund that as aggressively as you would like. The death benefit will continue to rise, so it doesn't become a modified endowment contract. The more money you stuff into it, the higher your death benefit or the higher amount of money you can borrow from yourself. So with that, I can loan myself money at 0% interest for the rest of my life if I choose. I can bank interest free. It has all the benefits of a Roth IRA, so I'm putting post-tax money into it. It's indexed to the S&P 500 every 2 months. It indexes. There's a 0% stop out, so I can't actually go lower. I also don't have a ceiling. A lot of IULs will have stop outs, but they also have ceiling limits. They won't allow you to earn more than 7 or 8%. So I self-bank through Index Universal Life, and with that, I have a long-term care plan. I have chronic illness, terminal illness, disability. Basically, my aging plan is in place through the Index Universal Life. That makes all of those other policies, as a rider, those other policies are very affordable. If I were to go out and be underwritten individually for each of those policies, the premium would be ridiculous, right? But by rolling that into an IUL, it was partly a retirement plan, partly an estate plan, but it's also partly a self-banking plan. So I can loan myself that money. I can loan my LLCs that money. As I build that balance, you can actually secure a qualified retirement plan. The reason I chose that structure is I believe that's the last frontier that the government isn't going to screw with, because that's where a lot of big unions and a lot of their constituents hold their big, massive retirement accounts and pension funds that really shouldn't be messed with. So that's another way that you can actually set that up, and you can self-bank from that. You could treat it like a traditional retirement account and just buy mutual funds, but you can also get very creative with it because it has a lot of loopholes that were left in place by the policymakers for their constituents who want to play the game. So follow the billionaires and learn how to play the game, right? So that's 3 ways that I self-bank. It's no different than how banks actually achieve leverage. So if we can gain control of one asset and then leverage that asset, we create new money. And if you can gain control of that first asset with no money down, like with a subject to, for anyone who's thinking, well, I'm starting with 0, go grab a house subject to the existing lien staying in place. Make sure there's equity with that. Go put a home equity line of credit against it. You can cross collateralize 0 money down into millions of dollars, depending on your level of grit and financial savviness. But those are the things I'm doing. I'm minimizing the amount of cash I hold. I try to obviously minimize the amount of risk. I'm really not that risk tolerant. I underwrite hard and long. A lot of times I will spend 2 years watching a fund before I even set up a pitch call. Like, I'll get to know people who did invest with them. I'll watch how that performs over time, and then I'll step in. And so far, I'm not even going to say it. So far, so good. I haven't had any relationships that went south with sponsors or GPs, and every one of them has performed incredibly well. So that's the name of the game for me. I'm not really playing the real estate game like as much as I was, just because, like I said, I believe a lot of these valuations are frothy. I don't think they're based in reality. And I think that when I look at the back end of the financial system through the Federal Reserve data, I see a lot of rough water ahead of us, and it's easy to cover up when you keep signing bill after bill into law and printing trillions of dollars. But eventually that has to stop, and that either stops by allowing the economy to rebalance and actually let recourse happen, or it stops with a currency collapse and the replacement of us as the exchange currency, which this time is very different. We have a whole new asset class that is truly decentralized, and crypto wasn't around when England did exactly what we're doing and ceded power to the US dollar. This time's a little different. We're not ready to move to Chinese currency as reserve. Maybe there's an IMF coin. Maybe there's a central bank of US Federal Reserve coin, maybe Bitcoin. I don't know. But those are all uncertainties. For me, I want to be relatively liquid because I think the economy we're emerging into, the monetary policy we're emerging into, and keep in mind, guys, certain decisions by policymakers could extend what I'm talking about, could be extended out over a decade, depending on what level of desperate intervention they might come up with. So I'm just sharing with you what's going on inside of my head and the actual actions I'm taking. But I feel like I'm in a position now where if I needed to come up with hundreds of thousands of dollars today, I can do that through lines of credit and self-banking. And if I need to come up with millions over the next quarter to 6 months, I'm also in a position to do that. So I might miss out on deals, but I don't all of my money is at play. All of it's yielding at least double-digit returns. And I live like a peasant for now. I live in a camper. I spent $27,000 last year, but damn, I'm having fun. I lived in 23 states driving a diesel pickup and an 8.5 ton toy hauler, and I only spent 27 grand.
Was that on
Um,
apples alone, or is that just food?
that's everything. Now that does include like the house paying for itself and all that. But yeah, 26 of that was for IPA, Dave.
Thank you. And just if I could just briefly summarize. So I think the way that I asked the question, I was trying to basically hone in on a number to keep in that I could keep around for my business purpose. And I think you expanded my thinking by saying you don't need to limit yourself to cash. I can still have the liquidity, but I can look for other types of things. And then I don't have to worry about this limitation I've been concerned about.
So one thing I have done in the past when I didn't have deals or didn't feel like doing deals, I would write mortgages. And it's a really good way. You can control the term. You can put money out to your local real estate investors association at 3-month terms, 6-month terms. Someone will bite. Like there's always somebody that's looking for capital, right? So
Yeah.
I've done basically transactional mortgages for as short of a window as 6 hours. But I did it for 1 point origination and 1 day's interest. And I was okay with that. I mean, it was a small win. I didn't have any exposure. They were okay paying the fees. So don't forget that you can do stuff right there in your home market and the
Yeah.
asset. And if they go sideways, you double your money. Like for me, if you really understand real estate in your market, probably the lowest risk investment I've ever made, at least in my perception, is a private mortgage to a real estate investor that I know is actually doing work. Because the day they close, they start working on the house and improving and raising the value of the house. If they default, I assuming you only go to a certain LTV, I underwrite to a 50% loan to cost as high as I'll go. So if he's buying it for 75 and he knows he's got to put 25 into it, I'm writing up to 50,000 or excuse me, that's loan to value, not loan to cost, unless it's in like a really low income neighborhood and it's a deal that I don't feel great about, then I'll go loan to cost. But for the most part, the funds I invest with that I was talking to you about, they're at a 54% loan to value, about 70%, 75% loan to cost. But what happens if your investor goes sideways? If they get hit by a train, you step in, you use your first position to recover the asset, you finish the project, and you double your money. Just see their plan through. So for me, that's one of the least risky ways that I was able to achieve. And I did 1 point origination, 15% interest. And if the original loan goes out of term, then the interest retroactively adjusts to 18% across the life of the loan. No payments, balloon at the end, interest and principal due on maturity. Because I'm a terrible bookkeeper and I've been traveling the world and I don't feel like cashing checks every month. So the money all rolls back into one payment. There's one cashier's check out, one wire transfer back in or cashier's check in. And that's all I did for the entire term of the loan. And that's what I used. That's how I turned a $12,000 self-directed IRA into $128,000 over between 2014 and 2020. So over 6 years, I 10x the balance on that account only by doing what I just told you. That's all that account ever did was write simple, small balance investor mortgages in first position. I've never taken a second. I've never had a single default. One was a 5-year note and not a single payment was missed. And that one did have interest only payments, but no payments were missed. So that's something that I think you have the capacity for. And if you really understand your market, you could look at being an estate advance, offering estate advances and earning a fee for that. You could look at being a lender to estates. Like you could actually use cash to buy estates. Something that came up in a Facebook group or somewhere yesterday, we were talking about one of the options that I presented was, what if you just buy the estate, like buy the heirship? And we have members. I don't know if Daniel Morey's here today. Daniel has actually been doing that for a couple of years. He actually will find families who don't want to deal with. He'll make them an offer. They'll essentially assign their heirship over to him and he becomes the administrator or he appoints an administrator and he works out the estate just like the family would have to. And he gets his gain once it's all completed. So there's things like that that you can do that are in your wheelhouse already. You understand that it shouldn't be that risky because you have the team, you have the skill set, you have the capital. So there's creative things like that that we can do in our own backyard. Or you can go back to the rabbit hole that I accidentally took us down because I didn't listen to your question good enough and do all those fun things.
Well, thank you. So I'm looking forward to getting my business off the ground, and you're awesome. So appreciate it.
Yeah, thanks for being here. That was a good question. Sorry if I misunderstood you in the beginning and went too far. So Jonathan said holding money in municipal bonds right now might not be a good idea. Not for me. I just don't see the yield that I'm looking for. Patrick, are you on here? Do you have a mic? I see your question in writing, but you want to, there you are.
Go ahead. Basically, now I've got a CSV file that's got a bunch of the pre-probate leads. And as I was going through them, there are like 3 or 4 named relative, whatever, with almost every record. So I'm like, which one do you call? Which one do you mail? Do you call? Do you email? It went from what would have been normally a 200 or 300 records now to a 800 record, possibly. So just trying to streamline the process.
So I'm going to try to stay off. I'm trying not to get on too many soapboxes today.
If we get to NFTs while we're talking.
So I feel about as bullish about pre-probate as I do NFTs. I'm not a big fan of pre-probates because of how most people approach them. I don't believe that it's a list that should be direct marketed to. If you are direct marketing to that list, you should very strong, try to hide that and make it look like a farming campaign or like a broadcast marketing effort. The reason I say that is you're eventually going to mail some woman who just lost her 16-year-old son to suicide. You're eventually gonna find a sister who just lost the brother that was the closest relationship in her life, and he was flat ass broke or into debt up to his head, and he's not gonna have a probate. There's no value to the estate. By directly soliciting these people, you stand to stir up enough negative emotion to completely destroy your career reputation. And so please understand the risk in direct marketing to the list, because you will eventually get someone whose ego says, I'm going to get you, boy. And they'll make it their life's mission to repay the harm they feel like that phone call gave them. I've just worked with a lot of people who are super emotional. The way I believe the list should be marketed to is in a value-based kind of broadcast approach. I really like, you've probably heard us discuss in this community, a community Facebook group. So a really good way to market to this list, set up a community Facebook group, invite your probate attorney, a grief counselor, a clergy member, a social worker, an elder care attorney, a nursing home employee, the police chief, get anyone in the community that can add credibility to it. Have each of them be an admin in the group. Have one of them present every Tuesday night at 8 o'clock. Archive that in there. Make a library for your community of life transition, motivation, inspiration, help, where they can find support. Have psychologists come in and talk. Have a psychologist come in and talk about grief counseling for an hour. She's going to earn business, or he's going to get business from that. But you create a trusted resource in the community. Then you're ready to do your pre-probate marketing campaign. You set up a postcard. There you can be direct. You can say, we are a social enterprise here in the community. We have a community resource that we like to make sure any family who suffered a loss is aware of. Please join our community at facebook.com/Dallas grief counselors. Whatever that, the other thing you can do is buy a domain. So you could have dallasgrief.com. And then when somebody visits that, it's simply a forward from your domain to the Facebook group. So you can have a really simple postcard in the mail that says, go to dallasgrief.com to get everything we can, to see what all the ways we can help. And that is, in my opinion, an acceptable first touch to the list. Sometimes there's going to be a few in there that are ready to roll today. The problem is you don't know who the decision maker is, who has the authority, and these can eat up hours upon hours of your time, ending up being a social mediator and a detective and trying not to give legal advice. Where with probate, we pretty much know where we're at, right? They've given public notice, hey, we're ready to deal with this. We're ready to hear from the public about settling the estate. And because they're in probate, there's significant assets there. So pre-probate is one of those things that you should look at as a longer term. Your cash conversion cycle is likely to run longer, not be shorter. I think a lot of people rush in and buy that list thinking, oh, buddy, I'm getting upstream. I'm going to get all them motivated stuff. And what they find out is they get their ass handed to them as soon as they hit the phones, and they don't, the people who are talking, they might be motivated, but they don't have the authority to sell assets anyways. So to me, it's not a very dollar productive list. I think a better list than pre-probate is post-probate, because everyone else has already given up. No one's prospecting them anymore. So go to PropStream, pull a list of properties that transferred with an interfamily $0 transfer, and mail them. They just inherited an asset. They can do whatever the hell they want with it. So I like post-probate leads better than I do pre-probate leads. No one's ever coined that as a marketing term and thrown it out there. So maybe I should, but I think the inbound approach, like put a resource out there, invite them to the resource, and let them reach to you when they're ready to have a conversation, is the way to do it, where long term you don't mess up a lifetime reputation. I thought a lot about this when I was a pre-probate lead 60 or 90 days ago. I thought a lot about this and whether I should be so opinionated. And I'll tell you, like having my father pass away and just being really empathetic to that now, it didn't change my opinion. It pretty much solidified my opinion. If somebody would have reached out to my mom about selling the farm when she was just trying to figure out how to function in life, it would have been my life's work to come after that person and make sure that they had a hard row to hoe going forward. It's just inappropriate the way some people approach it. And I'm not saying that you're doing that and that you have done that. I'm really just showing you my true opinion. Just be cautious, guys. It takes a lifetime to build a reputation, and one phone call to lose it.
Well, one of the things was, and I see David's here. We talked about this, but a lot of the properties that are associated are already sold by the time we're getting to them. So that was one of the thoughts behind it, trying to get before they get to that. So if someone that had made a decision just hadn't gone through the process.
So I would suggest that rather than buying pre-probate leads, and I don't know where you're getting them, don't care, do what David's doing. He's playing the long game by building a community resource. He's investing 6 figures into a blog that actually has valuable content for all the people in his community. He's going to become the hub of the traffic when someone's in life transition. So the money you spend on leads, spend on a really good copywriter, on a content person. If you get value from, like, look at what we do. The amount of detail that Kat puts into a single post would take me 2 hours to explain to you guys, but she does it right and we reach the right people. So take our ideas, take our model, and build your own version of it locally in your market. Build a community like this, have a conversation at the same time every week, offer real value to those people. And it might take 6 months, but so might getting pre-probate to work. In 6 months, you could actually be the center of that conversation. And again, I want to go back, bring your vendors into it. They already have credibility in the marketplace. They have a law degree, a badge. You bring in law enforcement, social workers, grief counselors, clergymen. You don't even have to talk about real estate or law or finance. Just talk about what matters to what happens. Like, what about the widow identity crisis that happens in the first 60 to 90 days after someone loses a husband that she's been married to her whole life? What happens when your Social Security income is cut in half and you don't know if that retroactive payment that you think is coming is actually coming, and the price of medicine and food has gone up 40%? So bring in nonprofits, bring in people from food banks to talk about where they can get help, knowing that a damn good half of the traffic that comes to that is going to be flat broke, and they're not going to go through probate. They're on the pre-probate list, but they won't be probated because they don't have any assets. But you're still putting that goodwill out there, providing a community resource. They're going to go tell their friends when they lose somebody and when they lose somebody. I mean, you obviously have the time and energy to throw it at the pre-probate prospecting. My best answer is reallocate that time, energy, and capital into building something like a really badass blog, website, Facebook group, or all the above, where anyone in the community, before they hit a pre-probate list, they come through your community to learn about all the assisted living centers around you, because you've had a half a dozen, assisted living facilities come and join your Wednesday night calls, and you've built an archive. It can be one simple conversation, just like this one, can originate on Zoom and find its way onto YouTube and every podcast platform in the world, and your website, and then in your Facebook group. So you can take an hour a week and get your team together, but that can reach hundreds of thousands of people over time. So that's what I would say. Otherwise, on the pre-probate, do something like a house value campaign. So drop a postcard, offer a free house value, and see which ones own real estate that way. It's not that contentious. It's not, hey, we know someone died. Y'all got any real estate? And it should find its way into the hands of whomever has the most social authority in the family. It's likely that person will end up being the administrator, but it's probably not the answer people wanted to hear, but that's how I think you should market to it. Jonathan, have you got a mic today?
Yes, sir. All right. So I've started a Facebook group. It's called Just Ask Jayhawk, and I've started inviting people into there. But environment is everything. And so I'm really keying in on what you're saying about adding clergy members or social workers, people from nursing. I'm seeing this. But my question is there anyone that we should think about keeping out, or is it just open? Like, in your opinion, is there anybody we should prohibit from coming in?
Anyone who doesn't provide real value. If they're just coming to self-promote and not offer something that's actually useful, anyone who meets that definition.
It's good, because I was thinking of different agents that would definitely come in just to scope out or
Yeah, so you need to have, I
Fascinating.
mean, you should have group join questions and ask them for an email address, ask them why they're joining, what they hope to benefit, how they found out about you. Don't get too complex, because then you'll limit the number of people who join your group. But you can increase the number of people who will answer those questions by explaining why you're asking them. For example, hi, welcome to the group. As you might imagine, to protect the integrity of this group is a difficult thing for the admins. So we'd like to ask you just a few short questions. Please answer authentically, or you will not gain access to the group. And you preface that, and then you say, okay, what's your email address? We will not sell your email, but from time to time, we send out recordings of valuable, contributions that our members have made to the community. If you'd like to receive those, drop your email. You could ask them for a phone number. I wouldn't, because you're building an online community, but ask them what they hope to gain, which, if any, speakers they would like to see, like speakers or members of the community, would they like to hear from? What is the number one thing that they feel like needs to be dealt with right now? And over time, you'll get to know your audience through the answers to those questions. For example, if 60% of people who joined this week are all trying to figure out how to file the last tax return because April 15th is approaching, then now it's time to have your CPA come in, and he actually talks about filing the last tax return and what that means if you're the administrator of an estate, whether that's through trust or probate. Just one example of how a question could really help you go, oh, I see an immediate need. Now I know who I need to get on this. But you can use questions like that to filter the group and make sure you can, maintain consistency and integrity in the group. Next up, Ryan, how are you today?
Hey, Chad, how's it going? So I just had a quick question. I'm just kind of confused. I was listening to a recording somewhere. I don't know what it was, but it was with you. And somebody mentioned in their USP about providing a free service. And you're talking about like a social enterprise. And I'm trying to wrap my head around it, how it kind of works out. If I'm meant to be charging on some level, and if I am, like, how is that playing out? And what's the advice you have for there? Because I'm buying my first round of probate leads from all the leads later this week, and I want to get going on that. But I just want to know how.
I don't really support, mainly because, like I said earlier, I'm a crappy bookkeeper. I don't like chasing commissions, like affiliate commissions or taking fees from my vendors. What I teach is build a vertically integrated solution that can help with anything and everything the family could possibly want, and have a way to either directly or indirectly monetize each of those. So what I mean by indirect monetization is just like I talked about just now. If Jonathan gets his CPA to do a pitch next Wednesday night to his Facebook community, and the next time that CPA is sitting with a guy saying, hey man, I got some extra cash. I need to buy some rental property. You know any good realtors? Well, the CPA is going to go, hey, Jonathan did me a solid. He got me 3 new clients on that for doing 1 hour a Facebook call. So that's how I track payment, is through reciprocal referrals. Like if I'm doing something, if I'm consistently referring people to my vendors, I expect the same, right? I expect some opportunities to come back my direction. So don't overthink it. Like I don't collect fees. I don't take any of the revenue. None of it comes through my books. What happens in the last few minutes of an appointment, I'll actually bring together the strategy. I'll explain to them who all is going to be part of the service that we're providing, and that they should expect an email from me the second I get back to my office. When I get back to my office, I'll say, okay, so guys, here's the schedule we agreed to. And I use the target date. That's our closing date, the day that we turn them into private lenders. But the day the real estate closes, I'll say, we're shooting for a target date of July 15th. So that means we have to have a ratified contract, let's just say by June 1st. So we have about a 45-day window. In order to do that, we need to have the photography done no later than May 31st. In order to have that, we've got to have staging done the day before that. And then before that, we have to have a full clean. And before that, we have to have this. And you back it all the way up to today. And what I do is I put on each of those, I say, this is the stager. Her phone number is this. This is the cleaner. Her phone number is this. Is the photographer. His phone number is this. And I literally lay out a schedule of everything that will happen between the appointment and the closing. And then I copy every single party that is listed on that email. And I ask everyone to respond in thread. So please reply all to any correspondence about this case. And that's how I keep everybody on the same page. But everyone knows who else is part of the deal and what their role is. It holds them accountable. So you're essentially laying out an org chart saying, all right, here's the schedule. Here's what you're accountable for. And if anyone trips up, everyone knows because it's all on the same email. So there's social accountability built into it that way. And it makes them eager to do as good a job as they can. And that's just all I've ever done. I've never actually had to fire a vendor because they didn't come through. Like, people get me back. Like, the business will come back your way.
So I'm currently not a realtor. So I guess the point of the phone call is to get an appointment, right? And the point of the appointment would either be to try to get a listing or to buy it from them, right?
Yeah.
So what in a scenario where they don't decide to sell their property with me? Like, is there a way that I can, still provide value by being a consultant and providing vendors but then how am I charging it in that scenario?
What's your strategy like as an investor?
Well, I'm brand new. I've never done a deal. So like, I'm brand new to investing. Like I was thinking that like I could use this like service as a little bit of like a side hustle kind of thing while providing value and then learn as I go and then maybe start buying deals along the way.
Are you capitalized? Do you have cash?
Very little.
Do you have good credit?
I have good credit. Yeah.
Okay. Have you spoken to banks about using that good credit for real estate?
In what capacity? To like buy something? Yeah. I'm working on buying something right now.
Okay. Perfect. I mean, that's really where it starts. Like, if well, let me ask you this. Are you getting into real estate investing because you want to make a quick cash or build wealth?
Build.
Okay. You can go on these appointments. If your answer was, I just want to wholesale, I'm looking for quick cash, I'm going to buy houses for 50 cents on the dollar, you're going to find limited opportunity in this list. Like, you want to hit it early and hit it hard and do follow up for 12 months, but you're going to lose most of that money to taxes anyway. So it's competitive. Like, it's a tough business. Where your answer was better, you're looking to build wealth, you can actually get into these for little to no money down, depending on what your finance strategy is. And you can build up a hell of a balance sheet collecting free houses. And in a lot of cases, for example, if the family, there's a reverse mortgage on there, they're checked out, they don't even want to talk about it anymore. They think mom and dad gave the house to the government. If you haven't watched the episode Jason and I did last week, watch that. That's a very common scenario. A lot of times families will just walk away from homes with reverse mortgages, even though there's equity. So as a real estate investor with limited resources, you step in, you buy the house subject to the existing lien staying in place. You go to a community bank that does debt service coverage ratio lending. You say, hey, look, I have a 700 credit score, even though it doesn't matter because this house is rented for $1,000. My mortgage payment to you is only 800. So you've got the DCR to approve me for the loan. Please refinance, do it fast. I only have 30 days. But that's just one example of how you can actually collect a free house, and that book's on your balance sheet. And then the next time you fill out a personal financial statement, the loan is easier to get the next time. Eventually you can start to sell those assets off as the tenants you gain equity from the tenants making the payments. So it can be that you can bootstrap at that level where you can actually build a portfolio of, rental income and equity without having any exposure. But you can also save up 20, 30,000 in cash, get in one cheap, go refinance it instead of wholesaling it. And then you don't pay taxes on that additional capital you got back off the refi. When you do your BRRRR, there's no tax that's due on that because it's debt, not equity, right? And then you can decide whether or not you hold that house forever. But in theory, if we don't take away the step-up basis and destroy U.S. wealth, like, you could ride that house on your balance sheet all the way through until you die, and then your heirs get a step-up basis and no taxes owed. So if you're willing to forego short-term cash flow to build long-term wealth, you can get into a lot more of these deals than the average wholesaler, which means you should try to go on as many appointments as possible. If you get a realtor involved, then you can, yeah, and you might, because you have limited experience, you decide that taking each of you going on every appointment is the best thing to do. So you go, you sit down, you hear the family out. The realtor understands what you can offer, cash offer, creative financing, those options. So they know when to stay in their lane and out of yours. And the same, like when you see that a creative financing play isn't going to work or you can't buy it at a deep discount, then you say, you know what? James is really our brokerage expert. That's why I ask him to come along today so we could give you the highest level of service possible. James, why don't you tell them what this looks like from a listing standpoint? I think that's the best service we can provide. So then you can do like a real-time handoff in the appointment. So
Gotcha. But you don't think there's a way to like monetize the service, like regardless of whether or not they want to sell it with me?
as far as bringing the team to the
Yeah, bring a team to the table, offer consultation, just like basically be a concierge for the entire process. And then if they do decide to do it with me, like towards the end, then I can take that off of the purchase price or something.
I'll say this. I think 100% of families I've helped in the past would pay me a service fee in addition to any money I made on the real estate if I ask at the end of it. In the beginning, there's not a chance in hell I could have sold that. Like, because people don't trust what they don't know. And what we're proposing is a vertically integrated solution that does that handles all of their problems, and we don't get paid until we do exactly what we promise. They're thrilled to pay us in the end when they see our real value. But on the front, it's tough. And so it would be a very difficult sell to sell as a service if you're asking for any money up front, like if you're looking to monetize it. And so by not charging a fee for service, but earning a real estate commission or being paid through the real estate side of the deal, we don't necessarily have to sell ourselves. We just have to come up with a solution that solves their problems. So I'm not going to say don't try it because I'd love to see your result, but based on my experience, it's going to be a tough sales job.
Gotcha.
Because you've got to, in order to get any money up front, you got to convince them that you're credible and trustworthy and that you're going to be there the whole time. And what you could, like one potential model, and it's not going to help you earn a lot of cash right now. The average estate is not closing for 6 to 9 months. So one model where you could do away with that front end objection is say, listen, we have a social enterprise here in the community. We provide an end service, and we actually get paid as one of the creditors on the estate. So you would have to wait a minimum of 4 months through the creditors period, and then for the next trial before your invoice got paid. So that the cash conversion cycle on it's long, and the amount of work you're going to have to do is up there. If you're going to be coordinating and like, if I were going to do it as a service, I would collect payments, I would take fees on those payments, and then I would pass the payments along to my vendors. And I would have a team coordinating each of the vendors and their activity. I think that you're stepping over dollars to pick up dimes.
Gotcha. I appreciate your input.
Yep. But Ryan, like, good question. Like, it's obvious you're thinking this through, like you're looking at all the possibilities. So I don't mean to discourage anyone from ever trying anything like that.
I think I'm still going to try it. I'm definitely, because I have very limited resources right now. Like I'm just starting. I mean, I'm only 24. So like, I'm just trying to just field all my options and figure it out and just like build momentum, get some traction going, and then get into what I think is the real way to do this that you teach in the course.
Have you ever, so you're not a licensed agent. Do you have an interest in getting licensed?
I do. I've gone back and forth with
There's a couple of ways you can make cash quickly, and it's kind of crappy work, but in your position, like even not being licensed, go to R.R. Donnelley, a commercial real estate firm.
R. Donnelley.
And get on their list to do BPOs and drive-by appraisals. And I forget what they call it, but they'll pay you $50 to ride by a shopping mall and snap a few pictures with your phone. You can fulfill in a couple of minutes, and $50 shows up. You can do BPOs, broker price opinions, commercial BPOs. You can do residential BPOs. Find little things like that you're out driving for dollars anyways. You're moving around town. It just gives you opportunity, just little base hits, like a little bit of cash here, a little bit of cash there, but it adds up. And especially if you're in, what market are you in? Yeah, there's going to be tons of that. So what happens, like lenders will order BPOs through real big commercial houses like Cushman Wakefield, R.R. Donnelley. So the bank will say, hey, we've got this mezzanine loan on this. It's maturity, it matures in 5 years. We haven't checked on the asset. Can you guys get a guy out there? Well, they'll sub that out and pay someone 50 to 150 bucks just to drive up there and take pictures of it. When I was tight on cash, I've done that before. I mean, I've gotten as much as 200 bucks to take 6 photos and upload them onto a website. Like, it was easy money. So there's things like that you can do. Think about inside the real estate industry, what type of ancillary service income can I raise to create some capital for myself? So if you can do 10 of those BPOs in a day, like a day while you're out in the field already, that's an extra 500 bucks. Turn that 500 bucks into a Facebook campaign, turn that into 25,000 in revenue, right? So there's things like that you can do too. Do you have a mentor? Like, have you connected with any investors in your market?
Yeah, I have a couple people that I can talk with regularly.
Okay. And have you asked them what it might look like if you bird dog deals to them? What they'll pay you as a referral?
Yeah, I think that I could definitely bring that up.
That's another way. Like, the thing is, like, in your mindset right now, what I see is fear is dominating you, and it's creating some barriers that might take you more time to overcome. The reason I see it is because I did the same damn thing to myself. I'm only 24. I don't have that much money. Like, you're leading with, that's your identity as an investor right now. And I'm trying to be easy on you and encouraging, not discouraging, but get rid of the stinking thinking, man. Only 24 bullshit. 24 is the new 40. Like, look at what some 24-year-olds have accomplished.
Yeah.
I'm just 24, and I got a long runway in front of me. Is a much better way to think about that. And instead of, I don't have cash now, I don't have any cash, it's like I'm working on replacing my cash or whatever that is, just a healthier belief. But I'm trying to come up with ideas that might kind of raise your confidence level as you step into this and give you some cash and show you that there's a lot of ways to make money in real estate, thousands.
Yeah, absolutely. No, I completely appreciate everything you're saying. I do think maybe you misinterpreted what I was saying. I'm pretty confident. I'm a confident dude. But like when I said only, I pretty much meant just 24, just getting started. I'm a hungry dude. Some of the stuff that you said is definitely stuff I haven't thought of. And I really,
Yeah, talk to a couple of those guys that are buying and selling a lot of houses and be like, hey man, I'm out there pounding the streets. There's deals I don't want. Like, what if I bring you a deal? What can you do? At one point I had more appetite for deals than I was finding in deals. I actually went to these door-to-door meat salesmen and offered them 500 bucks on every house I closed on. And then I went to the Schwann's guy and I went to the mailman and
yeah, I've been talking to mailmen.
so like I was offering people that. And I mean, you never know, they might offer you $1,000 to bird dog for every deal you bird dog to them, and then see what you can find. And are you using PropStream?
Yeah, I've been using PropStream.
Have you used the app, the Drive app?
I don't, I just found out that PropStream has the drive.
Yeah, that's a really, man, we used to do it on pencil and paper. Like, I would get on a motorcycle and spend hours riding every street.
Yeah, that's what I was doing.
And I mean, it was, some neighborhoods didn't like it too much, but I literally rode every street and pen and paper wrote down every single address that I could find that looked like it might be vacant. Then I would come back, go to List Source, buy the list or wherever I could get it, and then work on it. But that's awesome. I mean, it sounds like you're turning over all the stones. But talk to those guys and say, listen, I'm just getting into this. I intend to be a contender, but I'm trying to learn as much as I can and raise as much cash as I can. How can I help you scale your business? And the good investors, the ones who you can look to as mentors, will be like, huh, well, tell you what, man, I got more work than I can do. You can do this. And they might hire you to do marketing. They might hire you to put out bandit signs or whatever that could be. I tried it when I first got in. The investors that I first found in Roanoke they saw me as just as competition and tried to set me up for failure, tried to get me into deals like a house with mold, and they were going to let me overpay for it. And thankfully I dodged those bullets and did just fine. But the people I met in the same town, they were just hanging out in a different place, were really outstanding men who owned 100 to 700 houses that were a wealth of knowledge. They had that contribution mindset. They were happy to throw a bone and share a deal and this and that. And that's what you're looking for. I've found the easiest way to find the investors with the highest level of integrity is usually through wealth advisors or commercial bank. They're like, it's not saying that someone who doesn't own 100 houses doesn't have integrity. It's just someone who does pretty much has to, right? Like
Right.
they've had to build a pretty good reputation in the community. So through networking with community banks, the loan officers on the commercial side of community banks, they can point you to the guy that owns 50, 75 rental houses and is looking for more deals or looking for more help. There's hard money lenders. You can actually go find investors for the hard money lenders. They typically will pay you a 1 to 2%. Sometimes they can afford to pay you a 1 to 2% fee because they're taking a 3 to 4% fee on the front end, right, for origination. So anyways, a few more ideas. So Ryan, anyways, I even if I'm only here to encourage you. I hope I didn't overstep my bounds with you there, but I thought I saw a limiting belief, so I figured I would bring it up.
Yeah, I'd rather you do that than not say anything. So I appreciate it.
Yep. Stanley, you're up next. How can we help you?
All right. How you doing, Chad?
Good. How are you doing? Welcome
I
back,
am
man.
doing-
We haven't seen you in a couple of weeks.
Yeah, I have been putting everything that you have been saying into practice, so it's keeping me busy.
Nice. How's it going?
Yeah, it went well. I recently attended the estate planning council's meeting last week, so I networked with some attorneys there. So
Okay.
I actually
And
met up
what
with
was your
one-
reception?
Yeah, it went very well because verbatim, they said to me that they've never met a real estate professional who offers all these services.
Yeah, boy.
Yeah, yeah. So that was definitely awesome. So I went on some lunch meetings yesterday with one in particular, and we discussed how we can help each other out. And she was definitely receptive to everything I said, such as co-hosting seminars and having her and I create a list of legal and non-legal obligations and things like that. So she was definitely open to it.
That's amazing.
So-
Before we move on, Stanley, a couple things.
Yeah.
You've been part of this community for what? Month and a half?
Yeah.
And how much experience did you have in real estate?
Man, absolutely none.
Right. Now, I'm gonna put you on the spot. Did you
All right.
expect when you approached those attorneys with your offer, what did you expect? Did you expect them to be so generous and like welcome you to a lunch meeting and like just all of a sudden it worked?
Man, I really don't know how to answer that question. I know before when I was going to attorneys, it was just mostly selfish. Hey, I do this, I buy properties, can you send me properties? And I was getting shut down left and right, nothing at all. But once I started with this approach, like they were all receptive. It was just overwhelming.
Yeah. Well, that's awesome. That's a typical result. I put you on the spot because a lot of folks finally 6, 8, 10 months in will go visit their first attorney and they're like, oh my God, that was so easy. Like, hey, I got a deal already. So that's awesome that this early in, even
Oh,
though you
yeah.
don't have experience, you're trusting the advice and you're moving forward, taking action on it. That's really awesome, man. And I'm
Oh,
glad
yeah.
you got the result I expected, even if you didn't.
Yeah, not every attorney is going to be a good fit, but for the ones who are good fit, man, they will love you from here till forever. They'll love you.
Yeah. Have you gotten to watch the last couple of attorney episodes we've published? The one with Rylas Dana, Al Nicoletti. We've got 2 more.
Yeah.
We have 2 more in the can, 2 more different perspectives. And Al, I see you're on here today. One of them is your neighbor, and she's a Colombian. So I'm excited for you guys to meet. Yeah.
Oh, okay. What's her name? Oh, what's her name?
Well, you'll find out whenever we publish.
All right. So I don't want to.
She's in the North Miami market, and I told her I was going to connect her and Elle. So, all right.
cool.
Well, anyways, I interjected. Did you have a question, Stanley, or do you just want to share that?
Yeah, I just want to share that just to encourage everyone just to keep on going and just listen because the stuff it definitely works.
Well,
And
thanks
the
for sharing
second-
that. And way to take action and get out there. I'm glad you got a consistent result.
Yeah, all these fears that I had, it wasn't real. It was just me. It wasn't real at all. And the question that I do have is, I'm in a process. I've already created the list of non-legal and legal obligations, and I'm trying to circumvent the anti-solicitation laws. And what I did was in the very footer, I said, my company does not provide legal or tax advice. Below are a list of trusted attorneys that we proudly endorse for your consideration. And I listed 3 attorneys. Is that fine?
And now you've got all 3 of them know that they're there. They have a fair chance. They're held accountable to do their best work because they know they're competing with your 2 other top picks, right?
Yeah.
Seriously, like what I said earlier, like putting all of the team members on one email, letting them know that everyone else is watching, you'll get a better result. You'll get a higher level of service from each vendor that you work with.
Yeah.
And it's not anything, you're not setting the trap for them. You're just asking them to do, what you need done with some accountability.
Yeah, for sure. For sure. But yeah, that's all I have for today, Chad. I appreciate it.
Sure. Let's see. We are over. Harriet has a hand up. Harriet, how can we help you?
Are we over time? I can wait.
Nope. Go ahead.
Okay. Okay. I purchased the first set of the course. I'm just a little confused as to, are you still part of all the leads or how does it work?
No, I sold my shares in all the leads last year. I brought probate mastery out of that independent, and we're an education and service company now, not a leads company.
Okay. So what happens? I hear you say purchase a list, and where does that come from?
I still think the best probate list provider for most people is all the leads. The reason is all the systems we built around the lead. The lead is a commodity. We can get those for free in a courthouse, but the list management and the marketing automation is their biggest X factor still. So I'm still friends with those guys. Jim and Tim have been friends of mine a decade and a half, and I'm still friends with them. I'll see them this week. I just wanted to move in a different direction. And I believe that the biggest impact I can make is through education, not selling leads. So my team and we decided to move in the education route. But what we teach is consistent with what as far as I know, Bruce Hills is their coach over there. Bruce is a personal friend of mine. I brought him into that company and he stuck around to handle the coaching. So it's going to be consistent. You're unlikely to hear some of the higher level things like the way we opened this conversation today. We're not really probably not going to hear that over there. We tend to talk more about long-term wealth building and strategy here, but we support them. If you look at the top of our website and you click on leads, it'll take you right to a video of me explaining what my connection with them still is. But I think they're one of the best lead providers in the country. The limitation they have is they only go, in most cases, they're only gathering leads every 30 days, where some can give you daily delivery. But I think they have the best phone numbers and the best systems in the business.
Okay, so finish the course, and then if I'd like to purchase the leads, then go there for that.
Yep.
Okay.
And we've got, if you look on the blog on probatemastery.com under the blog, or Kat can drop a link here in the show notes, we've kind of summarized, we've taken the top 5 probate lead companies in the country and just given you a really transparent look at the good and the bad of all of them. There's obviously other providers you can choose from, but unless you have an internal admin like a team and you've got a very system forward mind, it's difficult to handle the list management and knowing which one's to mail, which one's not to mail when you're 3 and 4 and 5 months in. And that's the beauty of all the lead CRM, is it keeps track of all that for you.
Okay, wonderful. Thank you.
All right, guys, there are lots of questions in the chat. We're 12 over. I'm sorry, I'm not going to get a chance to read through all of these, but I do appreciate the conversation. Sorry if I got long-winded on some of these things. I'm pretty passionate about making sure people are prepared for what I believe is coming, and also making sure that you guys build sustainable, lasting businesses where you can put that on autopilot one of these days and be standing here when I retire. I'm looking for my replacements. So anyways, I appreciate y'all being part of this community, always having good questions and engagement, and we'll see you next week. Thanks so much.